In 2022, a hospital in Memphis, Tennessee, sued 8,300 patients for unpaid medical bills. It garnished wages. It levied bank accounts. It placed liens on homes. The hospital's name was Methodist Labiner Healthcare. It is a non-profit. It does not pay federal income tax. It received that exemption because, in exchange, it agreed to serve its community, including the patients who couldn't afford to pay. Diane is one of those patients. She's 52 years old. She works as a medical assistant inside the healthcare system, earning $38,000 a year. She went to a non-profit hospital with a kidney stone. She qualified for the hospital's financial assistance program. Nobody told her it existed. She couldn't pay the bill. The hospital sued her. A judge garnished her wages, $200 a month, for 18 months, from a woman who works in healthcare at a hospital that doesn't pay taxes. You probably assumed nonprofit meant something, that a hospital without shareholders, without a profit motive, would treat the patients who couldn't pay differently from the ones who could. That assumption is reasonable. It is also, in hundreds of documented cases across the United States, wrong. According to research published by the Johns Hopkins Bloomberg School of Public Health, more than half of nonprofit hospitals in the United States spend less on charity care than the estimated value of their tax exemption. The public is subsidizing these hospitals. The hospitals are suing the public. Those two things are happening at the same time. By the end of this video, you will understand exactly what a nonprofit hospital is required to do under federal law, and the gap between that requirement and what many of them actually do. You will understand why Diane's wages were garnished for a bill she legally qualified to have eliminated. And you will know the one question to ask before you pay any hospital bill, nonprofit or otherwise, that changes the conversation immediately. Let's start with the deal. In the United States, a hospital can apply for tax-exempt status under Section 501(c)(3) of the Internal Revenue Code. That exemption means no federal income tax, no state income tax in most states, no property tax on the land the hospital sits on. For a major hospital system, that exemption is worth tens of millions of dollars a year. In exchange, the hospital agrees to provide what the IRS calls community benefit. Community benefit sounds specific. It is not. The IRS definition of community benefit is broad enough to include medical research, training of medical students, health education programs, and subsidized services, not just free care for patients who can't afford to pay. And crucially, the hospital reports its own community benefit figures to itself, then submits them to the IRS. The IRS rarely audits the numbers. There is no minimum percentage of revenue a nonprofit hospital must spend on charity care to maintain its tax-exempt status. A hospital can provide less charity care than a for-profit competitor and still pay no taxes. A hospital can sue 2,400 of its own patients while holding nonprofit status. Both of those things are legal. Both of those things are documented. Here's what happened to Diane specifically, and why it matters for you. Every nonprofit hospital in the United States is required by the Affordable Care Act to have a written financial assistance policy. They must make it publicly available. They must apply it to patients who qualify. What they are not required to do is tell you it exists when you check in, when you receive your bill, or when they begin collections proceedings against you. Diane earned $38,000. The federal poverty level for a single person in her state that year was just over $13,000. Many nonprofit hospital financial assistance programs cover patients earning up to 200%, 300%, even 400% of the federal poverty level. At $38,000, Diane very likely qualified for significant assistance, possibly full elimination of her bill. She didn't know to ask. Nobody at the hospital told her. She received a bill, then a collections notice, then a court summons. The entire legal process ran to completion before anyone mentioned the financial assistance program that had existed the entire time. A nonprofit hospital is not a charity. It is a business that does not pay taxes in exchange for a promise it gets to define for itself. Think of it like a restaurant health inspection where the restaurant writes its own score, submits it to an agency that rarely checks, and faces almost no consequence if the score turns out to be wrong. The incentive to provide charity care is moral. The legal obligation to provide it is vague. The enforcement is nearly non-existent. And the patients who fall into that gap are the ones who could least afford to fall anywhere. So now you know what nonprofit status actually requires and what it doesn't. You know how Diane ended up with a garnished wage from a hospital that pays no taxes? But the scope of this goes well beyond Memphis, and the question of who is supposed to stop it and why they haven't is where the real story is. In 2022, ProPublica published an investigation into hospital debt collection practices across the United States. What they found was not a handful of bad actors. It was a pattern. Hospitals in nearly every state were suing patients, garnishing wages, and placing liens on homes, including hospitals that were nonprofits, including hospitals that received hundreds of millions in tax exemptions annually. The Johns Hopkins Bloomberg School of Public Health followed with peer-reviewed research examining the charity care spending of more than 1,700 nonprofit hospitals. Their finding: 56% of nonprofit hospitals provided charity care worth less than their estimated tax exemption. The average nonprofit hospital received $11 in tax benefits for every $1 it spent on charity care. The gap between the public's subsidy and the public's benefit was not small. It was structural. The IRS, which is technically responsible for ensuring nonprofit hospitals earn their exemption, has revoked hospital nonprofit status for insufficient community benefit fewer than 5 times in the last 20 years. 5. For the entire country. Across thousands of nonprofit hospital systems, several states have moved to fill the gap. New York passed legislation requiring hospitals to automatically screen patients for financial assistance eligibility. Colorado enacted rules requiring hospitals to apply financial assistance to bills before initiating collections. Minnesota set a minimum charity care spending threshold tied to the value of the tax exemption received. At the federal level, the Biden administration proposed rules in 2023 tightening the community benefit requirements. Those rules were contested, and their implementation remains incomplete. What exists at the federal level today is still a system where a hospital can receive a $50 million tax exemption, spend $3 million on charity care, sue 2,400 patients, and remain legally classified as a nonprofit. Diane's hospital, Methodist Le Bonheur, faced significant public pressure following ProPublica's reporting. They announced reforms to their collections practices. They did not lose their nonprofit status. Their CEO compensation remained above $4 million. Here is what changes once you know this. 1 question. Before you pay any hospital bill, nonprofit or for-profit, call the hospital's billing department and ask specifically, do you have a financial assistance or charity care program? And can you send me the application? Not, is there any help available? Not, can you lower my bill? Those questions get routed to payment plans. The specific phrase, financial assistance program or charity care program, routes you to the department that can eliminate the bill entirely. If you've already paid a bill that you may have qualified for financial assistance on, it's worth calling back. Several states require hospitals to retroactively apply financial assistance to recently paid bills if the patient applies within a certain window. If you are facing collections or a lawsuit from a hospital, contact the Patient Advocate Foundation before you respond to anything. They offer free case management services for patients dealing with medical debt and collections, and they know which hospitals in your state have financial assistance programs and how to access them. If your income is under 400% of the federal poverty level, which is roughly $58,000 for a single person in 2024, you may qualify for significant assistance at almost any nonprofit hospital in the country. The threshold varies by hospital, but the program exists at every single one. They are required by law to have it. They are not required to mention it first. You have to ask. A nonprofit hospital is the only institution in American life that can sue the patients it was tax exempted to serve. The law that was supposed to prevent this never defined what enough charity care looked like. It left that question to the hospitals. And the hospitals answered it in the way institutions answer questions when there are no consequences for the wrong answer. Diane's wages were garnished. The hospital kept its tax exemption. The CEO kept his salary. The exemption is still worth more than the care. And the only thing standing between you and the same outcome is knowing to ask. Before the court date, before the collections letter, before the bill becomes a lien on something you've spent your life building. Ask right now. If you have a hospital bill you haven't paid yet, or one currently in collections, call the hospital billing department today and ask for their financial assistance program application. Those exact words. The link to the Patient Advocate Foundation is in the description. It's free. Use it. If you know someone being sued by a hospital or having wages garnished for medical debt, send them this video. Then send them directly to the Patient Advocate Foundation link. It may not be too late. Drop in the comments. Did you know your hospital had a financial assistance program before watching this? And if you've ever applied, tell me what happened. The comments on this channel are the most useful part of it. Next week on Body of Debt, your insurance company used an algorithm to review your claim. A physician spent an average of 1.2 seconds on your case before it was denied. We're covering how that's legal, how widespread it is, and what the word appeal actually means in that context. Subscribe so you're there.